Hey everyone. So today's video is going to be pretty simple. We're going to run through alphabetical order what transpired today. We obviously had a really good day, made a lot of progress. We're going to run through, looks like we're going to start with Airbnb. I'm not really going to get into the crypto today. There's really no reason. If you want to, just message me and I'll go over it. But there's a lot of really good stock moves that we need to review. And I really want to go over the shift that we're seeing in technology back into tech that we've been talking about in this newsletter now for probably 2 weeks that it's coming and it's starting. I don't believe it's over. I think it's starting. So we're going to get into that. As always, what we go over today is going to be extremely timely and actionable. So as always, consider subscribing to the channel, clicking notifications so that you're aware when it comes on. And informally, I'm going to start doing more of these pre-market live calls. So if you want to be made aware of them, it's best to just subscribe, and then I think you get a notification when it comes on. I'm just not ready to do them, state that I'm going to do them all the time just for time reasons. I have a lot of time constraints between doing this and the newsletter, Twitter, and obviously, trading. So let's just jump right into it. So Airbnb, there's a really interesting trend going on here. You're starting to see Airbnb get bashed a little bit fundamentally, and we're going to talk about that. So, the costs are going up on Airbnb. If they start getting rid of, just think about this realistically. If you start getting rid of the mask mandates, which a lot of these states are doing, and I don't really care what side of the aisle you're on. We're just talking about what certain governors are going to do, certain governors are not. But if you start doing that, people are going to want to start staying at hotels again, and they're not going to stay at Airbnbs, which means Airbnbs, the exorbitant fees they were charging, they're going to have to drop. So you could see them continue to have good revenues and then just see the earnings come down, which could be catastrophic for the stock. So I think what you're seeing here is you're seeing a lack of it being able to rally, right? We just can't get out of our own way. So just take a look at this. And we don't really need this one up here. But just look at this. We try to get above this level, and we really can't get above it. Now, we've had some stocks that have had huge moves today, and this is not one of them. This is actually selling off. And, you're seeing some weakness on Dash and things like that, but not to this extent, not to a drop like this that we can't even bounce back a little bit. So for the person that was asking me about this, or the people that were asking me about this one, to me, this is just an outright avoid. I don't like the action. Could it bounce up to the 21 days? Sure. But I just don't see a reason that I'm going to want to be in this. And I really just think you're just better off just waiting on the sidelines with it at this point. I don't see a reason to jump in here. There's too many other that look really good. Here's AMAT. Okay. And has earnings tonight. I think it's down a little bit, like $1 or $2. But look at how we're above the 50-day, right? We'll see what tomorrow brings. We're not sure yet, but high or low, right? Green volume right in the earnings. This is the type of stuff you want to be looking at. This is the type of stuff you really want to be paying attention to. So getting above this little wedge right here gets me above all this nonsense, right? 133, plus gets me above the 50-day, the 21-day, and the 5 and the 8 that are crossing. This is what you want to be in, right? This is the type of stuff. Stop looking for this and stop trying to get in stuff like this and hoping it's going back to here. I don't know where this is going. I'm going to tell you this much. I know it's not getting back to here anytime soon. So start looking for the ones that are breaking out that are saying, yes, we're going to break out of this range. Like here, look at this. Right? Look, see how that's just sitting there wedging? Get through this, get through that high, and then this becomes a possibility. Get back in here, we're back to 160. So this is the kind of stuff you need to be looking for, that kind of thing. Now, in regards to AMAT, the stocks we're going to get into, I like semiconductors. I think they acted exceptionally well today. Yesterday's pre-market, we were talking about buying the stocks on the gap down. I was pretty clear that I did that. And then today we were all over NVIDIA this morning on that pre-market live call. So I like doing those pre-market live calls. I think they're fun. And I think it's, what I'm trying to do is instead of me just sitting here regurgitating information, is just give you actionable ideas, things that you can make a decision on if you want to do or not. I just think it's very helpful to state, like, hey, if this, then this, right? Almost like a computer program versus, oh, I think tech is going to go back up. Like, I don't know how that's germane to you making money or educating yourself, just a generalized statement like that. So I try to be very specific. So crowd, I really wasn't asked about this one a lot. And usually I put them on here if they're actionable and I'm asked about them a lot. But this one, I'm shocked I'm not hearing about it. I'm above the 50 and the 21 on one shot today. Okay. You need to be looking at things like this, especially after you came down here, tested this resistance line of, this is the lower trend line of the upper support, right? Of the upper channel. And guess what we did? We just sat right on it. And it's pretty impressive. I mean, look, if you clone this line, right? Just to kind of give you an example of something here. If you clone this line and you put it in right here, and there's a lot of other going on up here, and we're going to get rid of this. And we're going to get rid of this for a moment. Okay, and you look at this line. This is your trend. You can see how it snapped here, broke, right? Hit here, hit here, hit here. So you always have to make sure that these lines have the same trajectory when you draw them. As everyone knows, if you don't have the same trajectory, you don't have a true channel. You can have different wedges, but it's not a true channel. This is your channel, right? So we hit the bottom of it. We reverted to the mean. With the 21-day is always the mean in a channel, right? If you don't break the channel, they usually revert to it. You can kind of see how it's done that, right? Most of them do. So you want to get to the top of this. Well, when we get to the top of this, where's that take me to, right? 230. I'm at 203. I think there's 30 points here. No one's asking me about it or talking about it. But I think you can get to the top of this channel fairly easy, especially with the cloud stocks. I mean, there's those stocks, and I'm going off on a tangent here, but they're setting up. I mean, this is getting ready to go above. We looked at buying this on a close above 28. Never happened, right? We rolled, and then we were in this this channel. See this channel? Let's get rid of this on cloud for a moment so you can see where I'm going with this. Okay, look where you closed. Look at the other channel. So get me above this. And let's get rid of this and this. No, I got rid of the wrong one. There you are. So get me above the 200-day. And not only are you above, or not are you in the channel above the 200-day on the cloud, but look at this, right? You're basically, if we go to, well, we can even use this because there's your support. Bonk, 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 right? You hit 1, 2, 3, 4, 5, 6, 7 times. So that's your major support. So we undercut major support, right? And bounce through it. Okay, so I've got a double bottom. I'm at the low end of my channel. I'm just getting above my 200-day. Okay, let's just drill down into this just a little bit more because I think this is very important to pay attention to. Because as everyone knows, I've been saying for 2 weeks now, and really the last week, that I think the energy trade and the commodities trade is dead. And look, I mean, like this is just telling you what's going to happen, right? You can see what a difference 2-3 days make, right? You can see that difference. Boom. And then you break from here. Your RSI broke over here. So you have a positive divergence on your RSI. I'll link that the RSI indicator video again from that Trade Like a Pro series on this one so that people can see it if they want it. But then you get above this 50, like this is gone, right? This is already telling you what's going to happen. You can see this little channel here, and that's it. Boom, we broke it, and then we're going higher. So this is going to head back to this. Now, if we head back to this, where does that take us to? It takes us to the high end of this. Okay, it falls back in the crowd. Where does that put us? Right up here, just to start. So you can see where I'm going with this. I would look at those. I'd look at that. I'd look at net. I think you're going to see more broad-based buying than just the semis this time around. Just a thought. I think they're going to diversify out a little bit. I think the breadth is going to increase in the market. It's just my thought on it. So Cisco Systems, I was asked about. So I always like the company. I've been following it for over 20 years, but Let's get into it. Look, obviously you had earnings today, right? Looks like we had a little reversal here, right? If you include the after hours data. So, I mean, this is pretty textbook stuff, right? You gap down and then you close at the high. It's pretty much what you want to see. I mean, it's clearly showing that there's institutional buying in the name. Look at the volume. Look how that volume came in on Cisco, right? I mean, here you are. I mean, it's beautiful, right? You've had 1, 2, 3 days, and you have to go back to a pandemic before you have a lot of it. And let me just throw this in so you can see it. The question is, what do you do now? Look, with something like this, you have to be really careful because you ran up like this. So you have all these, you have like weak hands here, as people refer to them. You have paper hands now, which I think is kind of funny. But so 52.80 was really your level, and you closed above that. You know, from this, you really need to see the swing, right? So from the swing is going to be this. So like until you get above 54, I wouldn't go near this. And honoring these, right, and waiting for this can save you a lot of headache, a lot. Look, I like this a lot. And, you know, I really wasn't asked about this. I'm just going to throw this out there. You may see this in the newsletter sooner than later. And I'm going to get rid of these all right now. And this was when we were just explaining what a double cut of a bottom was. And these are some key levels. I like how you're coming down here, and I like how you've gone up, and now you're just basing at the high end of this flag, right? And all this volume's coming in. I don't know why Dash is so popular right now with restaurants opening and people going out. I try not to think about it, right? You try not to think about the fundamental story too much, because when you think about the fundamental story, what happens is you put a bias with it. Like you put your own bias with it. Well, Dash shouldn't do well because people are going to go to restaurants. Then Dash will announce their earnings or some partnership. You know, who knows what it is. And then all of a sudden, everybody wants to buy the stock. So the technicals price will usually dictate what's going to happen before it happens. When it doesn't do that, you get huge outside moves that you can participate in anyway. So just keep that in mind. But Dash here, this is setting up for a major move. This is enormous, this wedge. And we've undercut this, and now we're just basing right underneath of it. So just keep this on your radar. It's definitely one that I like. I actually have a starter position in it already. You know, you're getting no action on this whatsoever. And I know people love this name, but I just want to review a couple things. So far, all I've done is sell down. I can't even get above 44.49. I can't even get above that level. I have broken the major trend of this. So this is not going up anytime soon. If you were to do a count, you know how like maybe people don't know this, but when you look at a chart pattern, there's 3 parts to it. 4 really, but 2 are the same, but just inversed. But let's just go through it, right? So you base, and then after you base, I could probably just do it with this. So after you base, right, then you go up, then you base again, okay? And then one of 2 things are going to happen. You're either going to go up or you're going to come down, right? I mean, it's not rocket science. So if you do this, then hold on, let me just close this off. So if you do this, it's basically 1, 2, 3, 4, right? Okay. If you are here, let me see if I can click on this, and you do this, and then we'll just throw this back up. Well, looks like I got to figure out how I'm going to do this. There we go. So put this up here and throw this up here just for intensive purposes. But what I'm getting at is 1, 2, 3, 1. I mean, it depends how you do the count, right? You could say this is a late stage rally off of this one. I don't really care. A base is a base to me. At time they move up. But what I'm getting at is when you are coming down like this, right? And you're coming all the way down to something like this, you're going to have to fall down, base again, and you can kind of see where I'm going with this, how you traded up, leveled off, and then you came down. Like this is not going back in the 60s or 70s anytime soon. It's just not going to happen. I don't know why it's trading down. To me, they're trading seasonally. But, we have seen beta come out of the market, so maybe I'm wrong. But I think these are going to trade with the football season. I mean, I think this is going to trade with the football season. I believe that, and I believe this one is too. I think they've tied themselves to gambling now. And Penn looks awful. So, I mean, I like the guy. He makes me laugh. But, if you were to just look at this is when it got added to the S&P 500. Okay, that's when everybody had to get in, right? And people that know how to draw channels were like, oh, we just popped out of the channel. Boy, if we break back into this, we're going to revert to the mean. And then you go and look where the mean is. I mean, it's exactly what it did. So the question is, what do you do now with this? Penn, I would say the same thing as this. You just need to avoid them, right? If you throw these lines in, and now we can get rid of my little drawing. But if you see the 50-day, the 21-day, I mean, these things are all crossing the downside. This looks like an H. I can't even stay above this level. Like, okay, maybe you get a push to 50. If you're looking for a trade, great. But this chart's broken. I have broken the upper trend line. Once you break that trend line, you have 3 days to get back into it, right? 3 to 5, right? And then you could see it here. Boom, bonk, tries, fails. That's it. It's done. Okay, so you do not have an upper trend. You're not buying a stock that's in an upper trend. You're buying a stock that can't get above its primary resistance right now. So just keep that in mind. What you really want to find is like things like this are interesting, but this needs a lot of work. I mean, look, there's a lot of room to run here, a lot. And I haven't done a lot of due diligence on this from a short position standpoint, what the short interest is. But this is your next level of resistance is 40 points from here. 40 points in $140 stocks, 30%, right? Yeah. There's the number. So I really would be looking at this. I really like this. Why? Because I'm getting above several key levels. Look at how the volume's picking up, right? See how the volume's picking up here? But I'm getting above several key levels at once. So I undercut here, right? Then I'm up, then I'm up again, and now I'm breaking the 200 and the 21, and I'm heading to the 50, just like that. And it's happening fast. So when that happens, that means you're seeing major buying. The other thing that's telling you that you're seeing major buying, I open at the low, I close at the high. I open at the low, I close at the high. That means that you had consistent buying all day long. And you have this huge upper trend line, or downward trend line, I should say, that when you break that, you're going to see a lot of buying step in. In my opinion, I could be wrong, but that's what I'm looking for. Now you break this and the buying steps in on this, and you should be able to see the difference between this chart and the DraftKings. And if you can't, just email me and we can walk through it. But once you get above this, I think you're golden. So I would definitely have this on my radar. At this point, I'd wait till I'm getting above the 50-day. But I think 176 is a lock on this. I think it's very easy for this to get to 176 now. So this is a miner. Looks like it's a silver miner. I mean, the 50 days crossing here, right? And it doesn't look, for whatever reason, that we have the 200-day in here, because I guess it hasn't been around that long. But everything's pointing up and everything's going great, right? The only thing that I would say to you is it's a miner. So the minute that silver comes down, this will collapse with it. This is what happens with these names, and it's really one of the reasons why I try to avoid trading them. They'll just drop out of nowhere. Like here, this looks great. Then you drop, spike, collapse. Looks like we're about to break out again, right? Collapse. About to break out again, collapse. Curling, got this huge cup. We're going to really do it this time. I don't know if you do it this time or not. I mean, if you look at the 1610 level going across, it's pretty clear that this is where somebody's selling it. I mean, here's your evening star sale. Here's your rejection here. So I don't know. I mean, I get it. And if you wanted to play this, I understand it. And that's why I have it in here. A lot of people want to play these silver and gold miners. And the other one that people kept asking me about was this one. And, look, I mean, it's forming a flag, and the flag's inside day. I mean, you've got a bunch of inside days here. For me, this is pretty clean, right? And this is HL. Let me throw this over here. But for me, this is pretty clean. If I wanted to play this on the long side, and that's the only way I think I would play this one, but just because of where you're at. But, you got inside days on inside days. Come on. There you go. So, but you see how tight I'm getting in here? right? So at the end of the day, let's get rid of this arrow and let's get rid of this arrow because we don't really need the arrows. They're not really helping us. So, but what you're seeing is, see as you get tighter and tighter on this HL in here, this is very interesting. And I don't even like these names. But once I take out a higher high on this, chances are you're going to see another level to this. So, you might want to just set an alert on that trend line going down there on HL. GATO, I mean, look, you can do the same thing. You break the cup and handle, or you break this, I shouldn't call it a cup and handle because it's not. You break this base from here down. I mean, here's your count, right? You can go up 6 points. I would rather play the HL. It's just my opinion. So, people have been talking about this one for days. This breakout, we went right here and it completed the pattern. Then we got to this level and then we broke out. And then we got here and we broke out. We keep doing it. Look, today I was pretty clear. You want to buy it if it gets above this level. We never got above that level for a period of time, right? Look, we closed right there. So this is an enormous move in this kind of market, and you need to keep that into account. Like, you're up 65% in 3 days. It says 5. But wait, 1, 2, 3, 4. Yeah, 5 days. So I really think you have to consider that, right? Like, do you really want to buy something that's up 65% now? Probably not. What I'd be looking for is for this to come back down, set up again, and then push. I'm not going to chase anything in this market right now. There's just really no reason to. There's so many good ideas that are depressed right now that you're going to have the opportunity for. So that's what I would look for. So NVIDIA we went over today. Yesterday was a classic. Just hit the bottom, bounced, opened and closed. Like, just look at this, right? I mean, just perfect. Opens at the low, closes at the high. Like, it just doesn't get any better than that. And here you are again, opens at the low, closes right at the 21 day. I mean, it's crazy how it does that. I know people like using the 20 day, but I just like using the 21 day. But where you're at here and what's going to happen next is I think you're going to get above the 21 now that you're above this wedge. And I think you're going to take out this high. And I think the stocks is going to keep going. But I don't think it's going to be a straight line. I think you're going to base for a while, come back in. You're going to test everybody's resolve. And we'll go from there. But I don't think that it's going to be a straight line. So now, I do like these names. I'm not saying that I don't like them. We called this pretty clearly today, saying as soon as you get above this 571, I think we even said 571 and a quarter, that you should be looking at this. And that worked out pretty well today. And we're going to get through the SOX as well. I have that on the list. So path was one that we have set up on here. And let me just put this in here. And we were just talking about this one earlier, but you just have to pay attention to where these things are rejecting, right? It's rejected here. It's rejected here again. And now I'm closed on the lower end of this bar. That's not really where you want to be, right? I mean, you really don't want to close here. I mean, you're really closing right here. You see where you're at? I mean, that's where you're closing. Do you really want to close there? Not really. So I'd watch this. This give back is not great. It just shows that they're still selling in here because, as we know, wicks are price rejection. So the reason I have this one in here because I'm trying to do everything that's actionable because we get a ton of ideas now. So if you break below this line and you break the 74, you really have to reevaluate your trade because it could come in. PDD is on my list, and maybe one I add to the might add this one to the newsletter. It's got to do a couple things, but then we'll get into that. I got to get above the 50 day. But what I really like about this one is I've been basing since March. So I have a base. It's not like I just started the base. And what we've done already is we've already had one attempt and failed. Usually the second attempt goes, right? When you're basing, usually it's that second attempt that works. So that's what we're shooting for here. And I think that's possible. And I like how we're at this cross right here and the 50 is right here. So I do like this. Now, when you're basing like this for a couple of days, one of the things you can do for the people that looked at the RSI or understand RSI, and again, I'll link that video to this. So if you want to understand RSI, I did a really basic tutorial on it. But you can look at this and say, geez, I wonder if this can give me any guidance. Well, It's kind of giving you guidance, isn't it? It's kind of telling you what's already going to happen, right? Do you see where I'm going with this? Like here. So what you're looking for with RSI, I'll do a quick rundown. What you're looking for is RSI is any type of positive divergence, okay, or negative divergence. In this case, we're trying to just understand what's going on. So what I'm getting at is, you see where we're at here? This point of the chart is higher. This point of the chart is lower, right? I mean, you get that. Okay. This is lower, this is higher. So the magnitude of the move, let me remove all these vertical lines. So the magnitude of the move, right, is stronger here than it was here. Well, what does that mean? Well, it means that you're probably going to break out. Now you can see a couple different wedges in here. You have this one that you got above, right? And then on top of that one, you can just use this other point. You can see the next one. But as you break this one, it means you're setting up to break this one. And really what you're going to be looking for is to get to this 152 level. So I think this is setting up. I really do. I think this is setting up. It can move higher. And I like this. So I'd put this on your radar and I'd watch this one. Let's get rid of that RSI now so that we have a much larger chart. A lot of people, I found out, watch these on their phones. So I try to make the video a little wider, clearer. So you could see pins. I put this on here because I kept getting asked about Snap. Look, if you get above the 200-day, you're going to see buying step into pins. People are going to want to be involved in social media, and they're going to be looking at pins. They're not going to be looking at Facebook. I can share the Facebook chart, but they're not going to be looking at Facebook. Facebook is not doubling from here, right? It's not going to happen. Pins can double from here. Snap can double from here. People are going to look at social media that way. Okay, they're the big players now. They're the ones with the growth. The growth in pins in their video is absolutely insane. So watch for this to get over this 200-day, push to the 21, and let's see what happens. But I like this, and I would start watching this. I think this is getting ready to really turn. So I just want to walk through this real quick. No one's talking about this. And I understand why. I was thinking that we were going to head down to 70. It didn't happen. We formed the H. And I want to point this pattern out so people get it. I always talk about the dreaded H. The thing you have to understand is when the H doesn't break, it's really a buy signal, right? So here's your bear flag. Okay, let's get rid of all this for a moment so you can understand where we're going to go with this. So let's get rid of everything. Okay, let's get rid of this. All right, so this is P time. When you have a bear flag, and this was your bear flag, here's your flagpole, right? And then you have this flag. 1, 2, 3, 4. We'll call those 3, 4 points the flag. Okay, basically was to here. Okay, and then the bottom of the flag is where? Bottom of the flag is essentially here at the bottom of the flagpole. I got one day where we gapped down, then went up. All right, so once you get above that, chances are you're going to here. Okay, so once you get above this 92 level on this, right, because this was really where you were on your flag. You can see the flag, and then you pop above it. Bonk, bonk, bonk. You keep knocking on the door. Eventually it's going to open, right? We hit it 3 times. What did it do today? It opened. And there are so many people like me looking at this on the short side going, this is offering the best risk versus reward out there. This has to go. And I'm going to say something. There's nothing that works less than a crowded short, right? And we're all waiting for this thing to blow up. So guess what it's not going to do? It's not going to blow up right now. It's going to blow up later when no one's looking at it. Or they're going to get their act together. So the next thing that this is setting up for is if I break this downward trend, people are going to be all over this, right? And the shorts are going to panic and you're going to get a nice squeeze on it. And I'm going to call it a short squeeze because you're going to see a squeeze because people are short it, betting it's going to go down, and they're waiting to cover. And right now, you should have covered today if you were short. Worst case scenario, you should have covered today because once you broke above the top of this flagpole the way that you did, that was it. You were done. You could have waited to see if you were going to collapse at some point, given it 15 minutes, but it is what it is. So as far as a follow-through day on the Qs, we really couldn't have asked for more, right? So today was just really nice. You have this bottom here, and this is what I've been saying in the market, where a lot of people are saying, I want to stay out of the market. I want to stay out of the market. And I've been trying to state that these turns, when they're coming now, are going to happen so much faster. The assimilation rate of information has changed drastically, and the amount of people that are looking at this type of stuff over the past 12 to 18 months has changed drastically. So that means your cycles are going to get shorter and your moves are going to be exacerbated, right? I mean, it's simple. So if everybody's looking at the same thing, right? So we gap down right to here. We run right to this level. All of a sudden, boom, we get to the 50. I mean, I was shooting for 323. That was like my highlight today. I want to get through 323. Just get me through 320. I gapped over it, okay? And now I'm through the 50. And now, right, I have to really study it. See this gap here? See this gap here? Right? Technically, if I get rid of this, and you see the gap, right, and the gap here, technically, I have an island reversal. So this is very interesting to me now. Almost as interesting as when we started gapping like this and running up. So you could start seeing a real push here. Now, again, I think you base and then go higher, but now we're through this, right? I mean, we did not get through this for how long? We did not get through this channel for 3 weeks. It's been 3 weeks of this nonsense. So this is what you're looking for now, and it's starting to get better. And it is getting better. Get through the 21 day, and you'll see even more buying. But the real thing we really want to get through is we want to get up to this level. Get through this 337. But again, you should have a long bias now on the NASDAQ. XLK definitely versus XLE and XLF. And I'll review those charts at the end of this. We'll go through the sectors. RBLX, I was laughing. One of the guys I follow became friendly with was talking about this today. He's like, please don't break out yet, just base. I agree with him. I hope it stays like this for a month. Now, if you're long this, you probably are throwing rocks at me and don't want to hear that right now. But I would love for this thing just to base and just keep doing it. I don't want to break through 78 right now. You know, for me, 77 3/4 has been the level. People are just going to use the dollar number. 78. We're all staring at the same thing. That means the chances of it when it does break out probably means it doesn't work. But let's keep this in mind. And I really like this idea through 78 now. I wasn't crazy about it here. You know, I mean, it's the first person to say avoid. And then you just look at how you're acting. This one, no one's talking about again. And this is setting up. And this is one that you're probably going to see in the newsletter again. We did fairly well with this. And I like the way that this trades. And I want to just say something. If you're struggling now and you're not having a good time, like making money in the market, you need to revert back to a couple things. The very first thing you need to revert back to is just start trading Qs, ETFs, SOXL, SPYs, diamonds, any types of ETFs, just to start building a momentum again, right? And then after you do that, start trading the leaders, like the real leaders of the market. You know, like the UPSTs that have been on tears, the Teslas that are turning today, the Rokus, the NVIDIAs. When you start trading those stocks, you'll start to do better because you're going where the institutions are putting their money. Institutions are not buying CCIV or some other, you know, the new term. I love this term, and I made to come up. I have a quote I wanted to get out today. I just didn't do it yet. You know, this term of pre-revenue. Pre-revenue is every company that doesn't make money. Like, not even doesn't make money, it's zero revenue. Why do I want to own a company that makes zero revenue? Because it's going to make money in the future. Great. When it makes money, not even earnings, but when it starts generating revenue, then I'll take a look at it. Until then, it's not worth anything more than what someone in private equity paid for it. And that's just my belief. And I would like to, you know, someone to explain it to me. The one that I always use is this. You know, they bought the company for $15. It went to $60 for some godforsaken reason. And then everybody realized what they owned and it collapsed. And it's never looked back. You know, they don't even have a production date yet. And people are paying 20% more than private equity paid. It just doesn't make any sense to me. And they push the merger date back. So you really have to be careful with this and understand that, yeah, you might get your guys on Twitter with your 100,000 followers that are touting this, and maybe they're in it, or maybe they're just living in their mom's basement. But the bottom line with this is, if it doesn't make you money and it's not generating revenues, no institution is out there going, you know what I need? I need another headache right now. And I think what you're going to start seeing with some of these is you're going to start seeing some winners and losers. Someone mentioned the cash position on this one and where the private equity are in. And frankly, I haven't had the time to look at it. But if you want to see something that's acting well that was in the SPAC space, this is setting up for a major move. You get above this level, and I know I went off on a tangent here, but there's a reason for it. I guarantee you that this has huge earnings growth right now, or huge revenue growth. And you see this little pattern? See how you broke through it? You're setting up to do another one right here and push this 23. So this is setting up. Like this kind of stuff on the SPAC side, I get. But if you're struggling, start looking for stuff like this, because this is where the institutions are putting their money. And and again, when you're starting out, there's nothing wrong with living in your mom's basement. It just means that you probably shouldn't be taking stock advice from those people. So here you are, and you're trapped in between these two levels. Here's your 50-day, 21, 50, 200, right? You have a lot going on here. This breaks out over the 50, and what do you have now? What happened today? I tried, I failed. I tried, I succeeded. Who's in charge when the stocks break over the 21-day, right? We go over this all the time, probably sick of me hearing it, or saying it. The Bulls are in charge. When was the last time the Bulls were in charge? Back here. How many days ago was that? Wow, 3 weeks. What else happened in 3 weeks? See where I'm going with this? So same thing, right? So what's a leader? This is a leader. This is why I can't stress enough how important it is for you to do your own work and learn these. But I would be all over Roku if it breaks that level. So SE has ran right up, got above the 50, got above the 21, got above this old downward trend line. I mean, this is what you want to see. You bottom, reject, can't get there, pushes, breaks through support, breaks through the 50-day, breaks through the 21-day. Do you see where I'm going? Like when you start seeing stocks breaking all these levels at once, they're the ones you want to be in. And here's that 5-8 cross that we always talk about. Now you are hitting something funky here that you had trouble with before. And I'm going to get rid of these indicators. We had a real hard time with this spot before, right? You can see that. But we're in a different market now. It's a little stronger. So maybe we push. Now, if you flip back into this has massive potential. So I'll be looking at this, but I really want to get through 252, 253. I want to get back over this channel. Get me back in my long-term trend channel, and I'll be all over this thing. That's all I'm waiting for. I'm not chasing it here. I'll pay up. I don't care. But get me back in this channel, because if I get back in this channel, and this is the one trend line, but it doesn't match this one. You really have to clone them to really see where that channel could take you, right? We talk about this all the time. And then you just kind of overlay it, and it gives you an understanding of where you're at. So you can kind of get an understanding that you get above there. I think you're at 300 with the potential to go into this channel, which would follow this pattern. I can get you to 325, 330, but first I think you can see 300 on this if you get back in this channel. So put that on your radar. Someone asked me about this one today. It just was not on my radar. It's an excellent trade. Congratulations if you're in it. And I just want to follow up on it in case you are in it, as what I would be doing now. So the time to buy this was right here, 22.35. It was perfect. You opened at the low. You gapped right above. So you close here. You gap right above that high, right? So then people are like, oh, I don't want to buy it. I could have bought it yesterday here. And then wham, that's the day it goes, right? Look at the volume that comes in. 22 to 26. Congratulations to those who bought it. I was asked, what would I do about it now? I'm definitely not chasing it. They asked me at 25, would I chase it? Absolutely not. You're crazy to chase things in this market, but it is getting better. But look for the breakouts and then get involved. If that pulls back to that level, I would look at that. Very similar to what I said about ZIM. You don't buy ZIM when it's hitting the top of the channel. You wait for it to come back and test a support level. So I keep getting asked about Snap today, and I get it. We're going to get rid of these. You're at the lower end of this channel, and you're holding it. You got through this level today. Now, if you mark a couple different levels here, but this one's the one that's important. Why is this one important? Besides that this is part of that flag that's down here, you still have this, right? But see this peak that was rejected before and this peak that was rejected? This is why it's so important to understand the concepts, right? And I really want to hammer the concepts more than just the ideas, but people like the ideas, and it's how we learn through repetition. But look at this, right? What are wicks? Wicks are price rejection. What happened? We were rejected. Okay. Probably shouldn't buy it till it breaks that level. Broke that level. What happened? Went up since it broke that level. It's telling you what it's going to do now, right? So this has a shot to $64 now. Okay. And whether or not it does that, we're going to have to watch. We're going to have to set it up. But I do think it's worth throwing in the 5 and the 8 on this and see the crossover here and looking and saying, geez, the last time it did a 5-8 crossover, what happened? Well, here it did a 5-8 crossover down at the base. How did that go? Well, that went pretty well. Okay, so that leads me to believe that you could buy this with a break of the 50-day. Say it again. You could buy this with a break above the 50-day, right? As long as you close above the 50-day, stay in the trade with this low, this bottom being your stop, and that is $54. So you have about a 3-point stop. I try to make it a little tighter if I could, but that's where you're at with it. So I like that trade. I think that could work. So the SOX is one that we've been in the newsletter since 32. 29 stop. Everybody knows I use the close as my stop, but let's just get rid of all these indicators for a minute and go through what happened. So yesterday in pre-market, I think I don't know if I could have been any more vocal stating what I was buying off the open. And it played out perfectly. We just got very fortunate, but we hit that 28 level and, we bought, and you can go look at the timestamps. But on Twitter. But the point of me saying that is you came in, we had a game plan, we executed the game plan, and it worked. Now, the game plan could have fallen, and if it did fall, then we just would have blown it out. But what do we do now? So we're cleared this level. We got through 30. We cleared this downtrend. What else has just been in a 3-week downtrend? I guarantee this is 3 weeks. Yep, 3 weeks in a day. So, you see the pattern that's going on here, right? As soon as the Qs turn, the SOX turns, Roku starts turning, right? So from this level, we should be trading to the top of this range. We should get to this $38, $39 range. That's what I think happens here. And based upon that, your NVIDIAs and AMDs and Microns of the world are going to go up. So I would not be chasing this here, sitting right on the 21-day, because we could come back down to 32. But you're going to get 37, 38, 39. So we're in at the right price here. Even if you're in from the 32 level, just stay in the trade. Leave it alone. I like it a lot. For those that were asking me about space, I have this in here. We're looking at this at $60 on this breakout, and then it never really triggered. I guess I can get rid of this. But I guess what was interesting about that was just to show, I think I left it in there just to show that you must use stops. Any professional trader uses stops. Anyone that tells you not to use stops has no idea what they're talking about. It's really that simple. Unless they're trading 1% positions and they just don't care if it goes to 0 because they're looking longer term out. But if you have a position that is, 20% of the account, and you're going to tell me you're not going to use stops, you're just going to blow up. So I really hammer that home. Any professional trader that you talk to that's on Twitter or Reddit that trades for a living uses stops. They have to. And the important thing is when you ask any of those traders, ask them this one question and they'll know the number cold. What percentage of loss do you have on average on your losers? And they'll know that number cold. Ask an amateur, they'll have no idea. So that's a big differentiation and one that I would recommend that people start looking at, because when you start doing that, your P&L will change. So the question is, what do you do with this now? Well, here's that trend. You broke above that trend and you just have massive selling. So for me, this is still a sell. Maybe when you get through 23 and a half, 24, actually, I'd be interested. But other than that, this is a sell. If you were in this here and you didn't sell today, consider selling. I think they have a launch coming up and it got delayed again. And then the stock went up because just, the insiders are selling that stock hand over foot and have already gotten out of it. So just keep that in mind. Tesla, did exactly what we talked about. Yesterday, we walked through this trade and I showed on the Bollinger Bands how you're at the low end of this and also at a support level, right? We went through this where we talked about this level of support and this band. It looked like we were going to reverse, and that's exactly what happened. Now we flipped this little channel and we're between this channel. We're between the channel and we're between the 200-day. So based upon bouncing off this line, so whether you count the bounce here and then the retest of the bounce of the line or here, this should revert to the mean. The mean of the Bollinger Band is right here, 650. So I still think that 650 is in play on this. And we'll see. But I like that trade, and I hopefully people executed on that one today. But I like that for those that were asking about it, and get it above the 200-day, and you could use that as another buy price area. So UPST, congratulations to those that were in it. I want to just walk through this. Today I came out, it was pretty clear, I think around 135, 136, and then it traded up again, of course, to prove me wrong, but that's okay. You have to have a good money management system in place, and I would constantly tell you that if you're in something like this that's up this amount, if you don't trim some of it at some point, you're going to have an issue eventually. You don't have to sell all of it, right? But even if you take like 10% of the position off or something, and then you move the stop to break even, so, if you own, let's just say you own 1,000 shares of it, and it goes up, right? And you're up 20, 25%. For you to sell 200 shares, even if it doubles, it's not the end of the world. But if you sold 200 shares and then it goes back to break even, at least you made something. So it's really about money management. Now, here, when we started trading down, I tried to give it a little room before I put out that thing. But once you broke this level, this 139, that was pretty clear what was going to happen to me. And then you broke down and then it got uglier, and now you have to break above this, and then you have a little test going on, and maybe it keeps going. It's not awful. You did break the downward trend line today, even at the end of the day in rally, but I would just be careful. I would definitely not be chasing that. I know people are still buying it. I would be really cautious chasing anything in this environment. Just wait for a pullback. You've had them for 3 weeks. They're not going to stop now. So this was one. I just want to go through the energies, and then we're done. We're going to go through the sectors, and then we're done. So if you're had enough, you can tune out here. But in regards to the XLE, here's your 50-day, here's your 21-day. And look, we talked about this level. Can't get above it. As a matter of fact, I even said, do not buy until you get above this 55.50 level. And you just keep rejecting and you keep testing these levels. And now this is starting to go flat. And now we're hitting the 21-day. And obviously you're going to see damage if you put in the 8 and you put in the 5, right? You're going to see that damage that you didn't have yet, but now you have it where you crossed here and now you're rolling on the 5 and the 8. So that tells you probably don't want to be in anything energy based short term right now. Just wait and watch. But this is starting to roll. Okay. This did exactly what we said it was going to do. It was almost textbook, right? We said when we got to this peak here, we said, you're taking this out. You're going to revert to the mean. The mean's the 21-day moving average. That's exactly what happened. We got to the 21-day, and now we'll probably hold that 21-day and come back. So if you were interested in buying financials, this is not the worst spot in the world to start looking at buying the Rileys of the world, to buy the Cowens of the world. It's not the worst place to start putting money to work in that sector. So, I talked about this yesterday. I said, geez, if it gets to 39, take a look at it. I feel that way still. Nothing's changed here. We just didn't break out yet, but this is a decent spot to buy these names. I'm sure Goldman looks very similar. Yeah, they all look the same, right? JP Morgan. So I would take a look at these names if these were names that you were interested in. They definitely are shaping up, but you're cycling out of them a little bit. And could it get worse? Absolutely, it could. It could get worse. I don't think it's going to. I think financials are going to be okay. I think the sector that's going to get hit and rotate mostly into tech is going to be oil. And we were talking about this and been talking about it for days, right? Actually, almost 2 weeks, where I said, look, we hit here. So I guess it's been about a week and a half. We hit here. I think we're going to hold. came up. I said we could retest. We retested. It was a little more violent than I thought the retest would be, frankly, yesterday with the Bitcoin selling. They just trashed everything. And now you're going to trade up. And I do believe that. I do believe that, this level, we just clone this and see where it puts us. I don't know why I haven't done this yet, but yeah, you can kind of see you're right in there. Yeah. You can actually, there you go. So it's fascinating to me how that always works. But you're at the low end of this and you've reverted. Now you reverted to the mean. If you flip the mean, which is the 21 day, you're probably going to go back up to here. I'm a believer that July, August, is going to go well for us. This may, sell in May, go away is a bunch of crap. Historically, great, you can do that, but you'll be losing out. Seasonality has an effect. The macro view has more of an effect than seasonality. People can trade from anywhere in the world now. They can trade from the beach. So if they're down the beach with the family and they work, they can still trade. It's very different, and you have to change with the times. So that's it. As always, subscribe to the channel. I will try and do another pre-market one tomorrow as well. I think tomorrow should be a lot of fun, actually, with option expiration and everything, and I have a couple ideas we'll go over. As always, subscribe to the channel, click notifications, and have a great evening.